And good evening, everybody. This is Michael Filighera. I am with logicalsignals.com and also tradershelpingtraders.com. And this is the Elliott wave update for the S&P 500 for Tuesday, July 27th, 2021. Quite an interesting day, to say the least. The markets did sell off today. And they did stop and then they rallied back, but they did sell off, and they were doing it in what I would term as a larger corrective phase than I would have anticipated. But as I take a look at our hourly chart here on the S&P, it seems to all fit quite nicely. Even though it extended beyond where I felt that it should, that's just not a hard and fast rule. It's more of a guiding rule in terms of, if I'm looking for a fourth wave correction, that it would end within the price territory of the previous four of one lesser degree. Well, it exceeded it, not by a whole lot, but by about 10 bucks. So what does that portend, and what does that tell me what's going on? We've been looking for the completion point for a minor third wave. I had left out the possibility that the fifth wave of that minor three was going to extend in and of itself. So it's going to produce a larger five-wave rally up. That obviously did not occur. So I put the five, so the minute five and the minor three into place. That set the stage for a minor fourth wave correction. So let's just put up a quick retracements. And we got up to 16 and a half. And you can see that we still haven't even done, which it would be more normal, even for this, because of the size of the advance. The normal pullback would be back to 4,354. We got to 64. So we overextended by 10 from the previous four of one lesser degree, and we came in $10 above, probably what would be more expected on a Fibonacci basis. So it really fits quite cleanly, and it turned nicely, Now, again, we're coming off in the after hours here. Apple reported today. They made money, but I guess not enough, and their forward guidance isn't really going to be pleasing to the market. So they're actually down about $2 from where the market closed at 146.77. So it was already down $2.22, and now it's down another $2. So about $4 in total. That's just going into, as we get started here in the Globex, which will begin in about 40 minutes. Then we also had Google reported today. Google blew the doors off their earnings. Google earned $61.11 billion in the second quarter. They blew the doors off. They continue to amaze me at the ability to make so much money per quarter. But that's a huge tech company. But more important, Google initially rallied back above 2,800, moved up to new all-time highs for Google, and then came back, and now they're trading about $2,760, which the close was $2,735. So it's 25 bucks higher than the close. More in line with, sort of like okay earnings, but it is a little bit better. Then finally, Microsoft reported today. And Microsoft initially did rally back up. In fact, rallied to a new all-time high very quickly at 292 before totally getting crushed off of that level and finishing down $8 below where the market closed during our regular session. So right now it's trading at about 278, 279, closed at 286.50. So with that in mind, we now have to look for tomorrow, where we have Facebook and we have Amazon, both heavy stocks within the S&P. Plus we have the Fed. Fed's going to come first. Fed comes out at 2 p.m. Now, if they do something that's really going to jack the market around, if they start tapering, if they start inching the rates higher, that's going to be disastrous for this market. They're just going to sit all over it. Right now, the bonds are reacting as if they're not going to do that, but they might even kind of bring it in a little bit. But that bond market may also be reacting to this flight to quality, they call it. Everybody's, afraid that the stock market is just really going to start to melt down now. And so they're shifting their money and they're putting it into the bond market, which should produce at least some type of revenue for them. They get some type of a dividend in terms of they get an interest payment. But if they don't come out and keep that all going, those bonds are not going to sit there. Those bonds will react either way, up or down. So we do have a lot going on again tomorrow. So a lot of things can happen. Here's what the S&P really can't do. The S&P cannot break. I have to give this to you, because if we drop again tomorrow, equivalent to what we did today, we're going to be pretty dang close to this level. We cannot break 43.29. A break below 43.29, actually, take that back. It could drop a lot more. It can't break below 42.79. I'll get that right. That is where minor wave one is. And so if this is a minor fourth wave, which I've already put in place, is done. So first of all, it would have to drop and break that level, which is going to signify and change this into not a very nice pattern. If anything, I got a 1, I got a 2, I got a 3, a 4, comes back over the 1. I could probably work it out. So I got a 1, 2, 3, 4, 5 coming off, and then this is a 2. It likely would fit, but the market should not turn and put in an additional new low if this fourth wave is complete. So it should just continue to pick up the rally and return back above 4,400 for a start. So we got a lot of proving to do, but I'm going to leave it like this for right now. What this does suggest is we rally tomorrow. Pullbacks again have to hold, first of all, above the 200 at 43.62, I'm going to call it, and then really should hold 43.54, which is where this 3A2 support is. But if it starts to drop and changes the structure, then we might be forced to put all the completion points right there at that high. And further upside is off the table for right now, until we complete a cycle degree, actually a super cycle degree in the S&P, super cycle degree fourth wave correction. Now, I'm not going to go over that here because it takes too long. And those of you that watch both of my updates, both the S&P and the NASDAQ, I apologize because I went into more detail on the NASDAQ, so it tends to be much longer. I'm not going to do that here. So tomorrow, it could be slow. They might come in and start selling it again. A lot of the selling was put on the back of China, which continues to see a meltdown in their stock market because of some political things that were put into place to protect the money of the people in power. Now, if that continues to occur, I think we'll have another follow through and we'll just start melting down here as we did today. But if that doesn't, and they continue to pick up the rally, then I'm going to be quite satisfied with how I've labeled the market. And I will be looking for it to go back up to new highs. And then we'll measure out again, as we have, how high it can get. We're looking here. That's our next stop. If the rally does pick up again, it really has to pick up again. Can it? Absolutely. So we've got that possibility still open. Downside should be limited. If we start to break hard and we break, first of all, below the 200, the hourly 200, we break below support at 43.53, and then again at 43.35 or 34, we're likely cooked. And then I'm going to look for the formation of this 5 waves. Then it's going to pick a point and it will stop, and we'll be able to label 5 down, and then we'll get an ABC rally. But it's going to change the count. More importantly, here's the advice. Trade what's in front of you, no matter what direction it's going. We'll figure out the count after. Trade what's in front of you. You can put fibs on it. You can use the fibs that I have in place. You can add your own so that you can put some parameters around the move that's happening. Follow your moving averages. Right now, they're all kind of turning a little bit to the downside. In fact, the 20's pointing down, the 50's pointing down, the 4 and the 8 are definitely pointing down. 200 just kind of sitting here waiting. So if these start to go and that 50 and that 20 start to drop below that 200, please don't get in the way. It is signifying to you that on an hourly basis, this market is going down. Then you make your adjustments to your 5, your 2, and your 1 minute chart so that you're trading in the right direction, because the pressure will be on the market going down, not up. So, and also keep an eye on your daily. If you're questioning what you think it is on an hourly, go out to your daily and take a look at what's happening. Come on, there. Take a look to what's happening here. Right now, I can't even see the 200, so it's not even here. The 200 is still well below here on the daily, but you still have it lined up to go up. So my daily is why I put the 4 there. It came down on the daily and held the 8. Very positive for the advance. It would have broken that 8. Not very good for the advance. So it did, and it held it. So that tells me 3, 4, we're going to go up. Stranger things have happened. Today was a stronger down day. It really was. Good, solid money being earned from shorts today, hands down. Now we play what's in front of us. If we get the same thing, but it's going in the other direction, lots of money to be made on the longs. And what will be happening is all the people that built short positions today, figuring it was all over, will start to reverse and they'll come chasing back after things. So upside could get itself going, no doubt. So play what's in front of you. Play it against your moving averages. Use the moving averages for entries and exits. Use the moving averages for where you can tell how far the market may get. Also use the Fibonacci. Use Elliott. We're going to leave it there. The next update will be Wednesday, the 28th.